Welcome to another daily recap. Today is Tuesday, January 30, 2024. There are 5 levels on the chart that we will use to trade the E-minis today. Currently, the pre-market at 7:56 a.m. is at 490.66. They have been going sideways and dripping a little bit lower from where they closed yesterday, almost all night up to this point, right before 8 o'clock. After the market closes, we will circle back around and analyze any and all trades taken at these levels. Here we are after the market has closed for the day. You can see that one of the 5 levels from this morning is now a dotted line. This is the only level the spiders hit, and it provided a nice trade. We'll take a look at it in more detail. At 9:45 a.m., the spiders were under the 491.25 level and working their way back up. And so the activation for a short position in the E-minis was in the system if the spiders got to and touched 491.20. That's the 5-cent buffer applied. And that happened. And within a few minutes of that trade being entered, there was a little drop here coinciding with a 10 o'clock data release, and that gave us the base hit. And they never really fully recovered from that pullback and basically just went sideways for the rest of the day, and no other levels were hit. No more trades taken today. And I want to show you some other time frames. Here is a 2-hour chart. During the day, I was noticing that on this chart and a couple other ones, the spiders were making this bullish kind of pattern over the last couple days. See the low of this big breakup candle? It's at 488.09. This area around 488.10 to say 488.15 is where the spiders broke out from here. And that was basically toward the end of yesterday when they pulled up. So I was looking at this overall bullish flag pattern and thinking that if they were gunning for 500, as we talked about the other day, this could be the writing on the wall that they're going to move higher over the next several days to a week or so. But at the same time, I'm thinking of the FOMC announcement on interest rates that will make the news at 2 p.m. Eastern tomorrow. And when that happens, the spiders will likely make sharp moves. So with this information in mind, I'm wondering if the spiders would continue to be slow and wait until the announcement to move, or would they test this low at some point of this breakup candle, because this bullish pattern would still be valid while the spiders were above this 488.10, 488.15 or so area that we just looked at. If they dropped them before the FOMC announcement, they could end up, this whole thing it could end up looking like a big fake out. And then the spiders, if they continued higher, that'll be the near-term goal, and they could bust into new highs. It's just a thought exercise I was entertaining during the trading session. Let's take a look at an hourly chart too. This is an hourly chart, and it's really the same thing on a 30-minute chart. This flag pattern is under development. And then right after the pit session closed, guess what happened? I'll turn on the after hours data so you can see. They pushed the spiders down all the way to where exactly? The low of this, they got as low as precisely 488.15. I believe. Let me take a look at that. The low was 488.15, right where we were just talking about, the breakout area from the 2-hour chart. I just find it interesting that they did that right after the market closed and didn't just like drip it lower all night in the futures or do it tomorrow morning. I don't know what it means. Just consider everything else I shared earlier. If they start closing hourly or 2-hour candles below, say, 488, then this bullish pattern may be off the table. It's not off the table yet. And in fact, we might wake up to new highs tomorrow morning. Just pointing out that something interesting might be going on ahead of this FOMC announcement tomorrow. We'll see. So back to the 1-minute chart so you can see the entire day with more detail. As I said, they hit no more levels of our day, so that was the only trade. Well, at least they hit no more levels, at least not during the regular session. They did after the market closed, but that's of no concern. So no more trades for the day. Here is the base hit from the morning in the log, but no other data that we can enter today. And again, you can use the averages up here. shown from all the trade data over the past couple of years to extrapolate annual, monthly, or weekly profit potentials based on number of ES contracts traded at these daily levels. That's a wrap for today. Thank you and have a great day.